All right, we'll go ahead and get started here. So welcome everybody that's on the call. This is the UMortgage home ownership discovery class. Today's May 25th. Glad everyone was able to get on the call. Really excited to kind of go over everything. There's actually a lot to cover. First and foremost, I want to introduce Andy Dowdy. And Andy and I have worked together for several years now. Amazing operations, amazing loan officer, and really has some really great relationships and does a great job. So just want to kind of give the mic to Andy and give a little background on you.
Sure. Yeah. Thanks, Chad. Thanks for the intro. Glad to be here today, guys. Like Chad said, we've known each other for many years, and I've had the pleasure of learning and working together and really, building a great friendship with Chad over the years. So super excited to be on the call today. I know we have a good amount of agents and also clients and pre-approved buyers, and buyers are looking to be pre-approved on this call as well. So we're very much looking forward to sharing with you our knowledge of the current market, how the pre-approval process looks, and how we can really help you get into that dream of home ownership. So I've been in the business 13 years. Chad for that, plus a handful of years as well. And again, thank you everyone for joining today.
Yeah, and for those of you that know Andy, most likely you don't know that he at one point in time in his life was a professional BMX bike rider. It's something that I like to bring up. So I like to take every opportunity to bring that up because it embarrasses him for some reason, something he should be very proud of. But all right, so like Andy said, we're gonna cover local market. We're gonna talk about all the things that you're gonna need if you're in this market. So let's go ahead and jump into it. First and foremost, Cincinnati was just recently in the news, and it is the #1 city in the state of Ohio to live in, and it's also ranked in the top 10 in the entire United States. So that is a great thing if you currently own a house. It's also a great thing if you are looking to move to Cincinnati, which I know some of you are, and then obviously a great thing for our investors that are on the call. You always want to be in an area that is on the uprise. Okay, so Cincinnati has both great history and also really looking to be even getting better and better. Okay, so some really great local information there, and then we're going to talk about something that's a big topic right now in the news, and that is inflation. Okay, so inflation is basically when the cost of goods increases. Okay, so your gas price goes up, your milk goes up, your grocery bill goes up. Okay, and one thing that a lot of people don't consider that is a fluctuating cost is rent. Okay, so if you've ever been a long time renter, you know that a rent can increase year over year or even month over month. So it's not something that you really think about unless you're in those situations, but the alternative to home ownership is rent. And here's a great article that we put in here that the rent increases with inflation on most years. And there are, if you kind of zoom in on that, that the line graph there, you'll see that rent has gone in one direction pretty steadily since 2018. So it is something that is shocking to me to see how much rent has increased. And if you think about inflation, if you purchase a house, your payment being on a fixed rate, the payment stays absolutely the same over 30 years. So, as the dollar is devalued and as inflation and the cost of everything else goes up, including rent, a fixed mortgage payment is going to go the exact same direction. We actually did a really big virtual event on Tuesday. Logan Motashami was on the call. He's a special guest. He's a lead analyst for HousingWire.com. He is a reoccurring guest on CNBC. He's a market expert, and this was one of the things he really focused on with that call was, with inflation, a fixed rate mortgage over a long period of time, 30 years, is the great equalizer in this market. So it's something to really consider. And the next graph here, so 2008 was when we had a financial meltdown, and we saw a lot of houses. There was one time where home values went down over a short period of time. So a big thing that happened in the market. Okay, so and a lot of people right now are hearing housing bubble, and they're hearing, hey, house prices have increased a significant amount. Okay, does that mean that we're going to go into a housing bubble and a housing crash eventually? Okay, so the important thing to understand that happened in 2008 and compared to now, the only thing that are similar is the fact that home prices were increasing over years. Okay, but the point of what I'm showing this graph for is that the lending regulations are so good right now. The loans that are in America right now that people are making monthly payments on a regular basis are the strongest that they've ever been, and that's what this graph represents. It's something I've actually been talking about for over a year now, and here's an actual graph that shows it. All the loans that are closing are higher credit score, bigger down payment, lower debt ratio. Okay, so and actually Logan yesterday on Tuesday actually said that the amount of variable interest rates that are in today's market are the lowest ratio wise that we've had in the recent history. And also 48% of the homes in America do not have a mortgage on them at all. So there's lots of different factors here that are extremely positive for the overall market. Okay, so
Also,
on the next slide, yeah.
Sorry, just to add to that too, if we go back one slide, the banks in 2005 to 2008 that were lending, doing loans that are not requiring any sort of income verification, literally just doing stated loans, those lenders are no longer there. I got into the business in 2010, kind of right when things were rebuilding, and it became a lot more difficult to get a loan. From 2010 to now 2023, the standards and the practices and the guidelines and the rules, everything that's tightened up so much has really put us in such a much better position now that this housing crisis that we have is not going to be what it was before. Nowhere near what it was before. And in addition, Chad, you mentioned 48% of houses right now have no mortgages. So that's 100% equity that they have in the house right now. Also, the amount of Americans now that have equity are more than they've ever been before as well.
Yeah, that's really, really good points. And I'm also going to have you, if you don't mind, maybe explain inventory as far as inventory compared to the amount of sales in a given month, and how that relates to whether we call it a buyer's market or a seller's market.
Sure. Yeah. So typically in a buyer's market, I look back maybe like 2018, 2017, 2016. The time on market, the inventory that's out there is 6-7 months plus. Okay. In a seller's market, which where we're at right now, simply the supply of homes is not meeting the demand that's out there. Okay. This means that the house is standing out when one goes on the market right now. In my neighborhood alone, there's been 3 sales in the last, I think, 8 months or so, 0 listings whatsoever. And those 3 sales happened before the house even went to market. So those were literally only people in the neighborhood and the local agents of the brokerages that were putting the house up for sale that knew about this. Okay, that's in my neighborhood. It's happening all over Cincinnati, all over different markets. Okay, right now we are in a seller's market. Less than 6 months inventory. Chad, on the next slide, I think we'll talk about, the number of listings that we have in Cincinnati right now. So what's important is whether you're a first-time home buyer on the call, a buyer that is buying an investment property, or maybe you're moving up and you're coming into Cincinnati and selling your house. It's important to work with a team and with an agent, many that are on this call, that's going to help you understand that and help you guide through a seller's market to make the strongest position possible that you can be in to be able to buy a house.
Yeah, so the amount of months that there's inventory is based on how many of new listings compared to how many sales. Okay, so when you have 1,000 listings and 1,000 sales, that's 1 month worth of inventory. Okay, so that's the current state we're in Cincinnati. Okay, so there's 1 month of inventory for every buyer out there. There's only there is for every house, there's exactly that amount of buyers for the month. So it's important to understand that, because when you hear the term seller market, buyer market, that's what we're talking about. Okay, and it is also important to understand that, because that is what drives home prices, and that's also what drives techniques and turn time on showings, how long that you have to think about if you like the house, why you have to act. We were just talking about this just about an hour ago with a room full of loan officers, and we said, hey, this is what it takes right now, right? This is what the process is right now. This is not what it took 5 years ago, meaning you have to be well qualified. You have to be pre-approved. You have to, people would go and look at houses not being pre-approved and then call loan officers after the fact, right? So that's not the market that you're in right now. You can't even get into a house unless you're fully pre-approved, and majority of them are going to be fully underwritten. And so when we talk about what's happening with the market, the fact that it's a seller's market, it's not to say it in a negative connotation. It's literally just to tell you, hey, this is where we're at today, right? And there's a fix for it. There's a hack for it. There's a way of getting the house done. We get houses into contract. We get our buyers into contract every single day. We actually have a higher percentage of winning the contract than all of our competition out there. And the reason is because we are using these tactics that we're going to get into in a little bit later. But here's some statistics. Shows 647 new listings, 459 houses sold in the last 7 days. So typically on that we look at 30 days, but this is just locally just what happened. Now, if you look at over a long period of time, this is where how many months of inventory were on there, and you can see all the way back to 2008. That was where it was the max buyer's market with 10.5 months worth of inventory. If you look on here and you see that these numbers don't match up to what we're showing you for Cincinnati, this is because these are national numbers. Okay, so nationwide, it's about 2.5 months worth of inventory, where Cincinnati is right at 1. So depending on where you're getting the information from, it's 0.8 to 1.2 for Cincinnati. And so we are actually below the national average, which goes back to the article that we shared earlier about Cincinnati being so desirable to live. It's a great thing. It's kind of like when your taxes go up on the house that you live in, that's actually a good thing, because it's a desirable place to live. You want people to want to be where you are. Okay, so just kind of move along here. Offers are up. We've really already covered that. So we'll go on to the next one and talk about, okay, so Andy, we've seen a good amount of equity, right, that has been gained. You mentioned the equity, the national average of equity, and especially over the last 3 years, we've seen equity, going along with that question of, oh my, is there a crash coming? Because we've seen such positive things happen in the housing market. Here is a great forecast graph that shows what, if you want to walk us through this.
Yeah, sure. So this is over 100 real estate experts in this poll were asked about the expectation of home prices in the next 4 years. And the consensus is that, as you can see here on the graph, 2024, just under 2% increase, all the way up to 2027, 4 to 4.5% increase, which is great. In the past, 8 to 10 years, we've looked at a 3% appreciation as being really about the strongest that we've seen from 2010 to 2020. Obviously, 2020, 2021, 2022, during the pandemic, we saw a crazy high spike, right? Probably never be there again, but just based on what we're seeing here now, the appreciations in the next 4 years are going to steadily go up. So you're going to be adding to your home's value, whether it's your first home, whether you're buying an investment property, or whether you're selling and going into a new property right now. You're going to be in a great position now to utilize and earn more equity every single year.
Yeah, and that's the great thing about buying during a seller's market, right? You are buying an asset that is appreciating, right? Whereas when you buy in a buyer's market, that asset may not be appreciating as much. Okay, so when we talk about the challenges of getting your contract accepted, it's for good reason, because it is a desirable thing to purchase, right? So there are 20 other people that are trying to buy that house, right? So that's a positive thing. That means that when you own it, the value is going to increase, right? Something to really think about. Okay, so kind of covered what's going on with rent. Rents are increasing. Covered Cincinnati, highly desirable area to live. Ohio in general, very desirable to live. We've talked about, we've talked about what has happened over the last handful of years as far as the values, and we've talked about the fact that what's going to happen over the next couple of years as far as value. So you're in a good place as far as thinking about purchasing a home. Okay, so now let's talk about what is that process when you're purchasing a house. What is that process of actually getting approved? Okay, I talked about based on the market, there's a different process to go through. So if you're on the call and you've purchased 10 houses before, no problem. We've got you covered. It's just the process has changed a little bit. So let's talk about the home buying process. Number one thing, and every real estate agent would agree with this, and anybody in this industry, especially right now, the number one thing is to get pre-approved. And of course, we're going to suggest that you get pre-approved with UMortgage. So let's talk about what that pre-approval process is. And again, some folks on the call right now are already pre-approved. Some people are just starting their process and they're wanting to just know a little bit more about what the process is. So let's talk about that. There are basically 3 pillars of being pre-approved. They're credit, income, and assets. Those are the things that we are going to be looking at and to determine whether or not you can purchase. And if you can purchase, what is your range of being able to purchase? So let's dive into credit. Credit is a range of anywhere from 850 down to 300-400. Okay, anything above a 700 is doing really good. Anything from mid 600 up is like a B plus. What are the factors that are determined with the credit score? Obviously, if you've had any big things happen, foreclosure, bankruptcy, car repossession, those are biggies. Andy's back. Hey, Andy.
Sorry, I water went down the wrong pipe.
If you've missed a payment, those are obvious things, right? Some of the factors that people don't realize that are factors that can lower your credit score are going to be, even if you've never missed a payment on your credit card, what they look at is the amount of debt based on how much credit you have available, okay? And they're looking at it as on a percentage wise, not on a dollar amount, okay? So if you've got a large amount of money on a credit card spread out at low percentages, that's not a negative. But if you have a $500 credit card and you have a $490 balance on that, that's going to be a huge negative. Okay, so little factors like this. Another reason why it's so important to start the process and have an expert looking at your credit earlier in the process, so that we can help you with these things if needed. Even if you're a 720 credit score, we're going to give you suggestions on how to get to a 760, because it may take you 3 months to find a house, and in that process you could be improving your credit along the way. Andy, anything you want to add on when it comes to credit?
Yeah, I'll just add to that. You may think your credit score is a 500 right now because Credit Karma told you, or TransUnion, or Equifax, or whatever credit monitoring service that maybe you signed up for through your credit card or whatever it is telling you that. But I will say, Credit Karma and those websites are great to have. For the most part, they're going to show your accurate balances and your credit limits and your accounts and things like that. But there's times where I've seen Credit Karma and the other agencies be 30, 40, 50, 100 points off. Okay, so it's very important. Come to us, let us pre-approve you, let us take a look at your credit, talk through, because maybe you don't think you can buy now, but you're actually in a better position than maybe you thought. Or maybe you think you're in a better position you are now, but maybe your credit's a little too low right now. Like Chad said, whether you're a 720 or you're in the 600s or 740s, we will take one step further, review your credit with you, help you come up with ways, whether it's in the next 7 days, 30 days, 60, 90 to get your credit improved to where you need to be, and show you what would happen and how much more buying power you have at a 680 credit score versus a 740 credit score. So we really help to be your advisors through that and walk you through everything.
Yeah, I'm going to double down on what you said at the beginning. The Credit Karmas, Equifax.coms of the world, great monitoring. Okay, great monitoring. I would suggest everyone sign up for them if you can find a free version of it. Okay, but it is almost it's almost science that they are always going to be a higher credit score than auto and even mortgage. So basically, there's 3 buckets of how you can have your credit pulled: consumer credit, which is Equifax.com or Credit Karma. There's auto, and then there's mortgage. Mortgage is always going to be the most stringent on your credit and also going to yield the lowest credit score. So in other words, if you're looking at Credit Karma and we pull your credit at the exact same time, Credit Karma is going to be 720 and we're going to be at 700. And you're going to say, oh, my score went down because you pulled it, and I've got multiple purples. That's not the reason. They're using different algorithms to come up with their number using the exact same data on both reports. Okay, so huge myth. Hopefully that's a big takeaway for everybody on the call. All right, so let's talk about income. There's basically 4 different buckets of income. Wage earner, W-2, fixed income, self-employed, and then the all-encompassing other bucket. So Andy, walk us through maybe what is the documentation that we're looking at? How are you talking to clients differently if they're fixed income versus self-employed?
Yeah, great. So for a W-2 wage earner, whether you're salary or hourly, we're going to look at 30 to 60 days of pay stubs, your last 2 years W-2s, and sometimes if you are hourly but you have maybe some tip income or bonus, we'll look at your end of year pay stub from the last 2 years. So for example, right now, if you were, let's say, an hourly employee but you received a bonus or some commission over the last couple of years, we're going to get your last 30 days of pay stubs, your last 2 years of W-2s, your end of year pay stub from 2022, and your end of year pay stub from 2021. What that's going to allow us to do is see the ebbs and flows maybe throughout the year of your different commission and how much you earn, and that's going to help us really, calculate and find out exactly how much income that we can use for your new home. Obviously, salaried buyer, you make $48,000 a year, pretty cut and dry. We're still going to need the W-2s and the pay stubs, and we're going to base your income off of that. Now, there's times where you're a W-2 wage earner, but maybe you've got child support that you are receiving. Well, as long as you've earned that for 6 months and we have all the documentation we need, we'll look at using that child support for you. If you have a part-time job and a full-time job, as long as you've been at that part-time job for 2 years during the time you've worked your full-time job, we can utilize that income. Fixed income, pension, Social Security, retirement. We work with clients that maybe are salary or hourly, but maybe they have a kid who receives Social Security, or maybe a past spouse who they receive Social Security or pension from. So what we're going to do is, through our consultations, is we're going to ask those questions, and we're going to come up with ways to show the most income as possible and really put you in the best way to succeed. Third bucket, self-employed. We deal with self-employed buyers all the time, whether you're a 1099 contract employee or you're a self-employed business owner. A lot of self-employed people are, strayed away or told that it's very difficult to get a loan. That's not always necessarily true. We have many options out there that are going to look at your last 2 years tax returns, look at your your gross earnings versus all of your write-offs and your final line. We're going to work with you on really determining the accurate income. We also have other options for loans as well for self-employed people that other banks don't have that we'll walk through, whether it's a bank statement loan or it's a loan that's just looking at your assets. There's tons of options out there that we go through with you and really help you make the most informed decision.
Yeah, I mean, my only add-on to that is on a regular basis, we are talking to people that have already talked to another lender and they want to get a second opinion. And the calculation of income could be the difference between you being approved or not. Okay, there are underwriting guidelines that we all use, but understanding them at the level that we do compared to another loan officer is the difference between your approval or not. Okay, especially when it's in some of these the bottom two buckets. So let's go on to the third pier, which is going to be cash to close. Okay, so here at UMortgage, we don't specify whether it's down payment or closing cost. Of course, we're going to itemize your closing costs. You're going to see exactly what you're paying, where it's going, all the way down to the $30 credit report. What we are going to make sure that you're educated on is what you're bringing to the closing. That's what's most important to the client, not what their down payment is and versus their closing costs. It's a combination of both. Okay, so we're focused on the cash to close and where it's coming from. That's the most important. So where it's coming from is going to determine what type of documentation and what type of verification that we need to do. Any money that you're using for closing must be both verified, okay, and we also have to source it and we have to season it, okay? What that means is we have to know where it's coming from and we have to know where it's coming from. We have to see it for at least 60 days, okay? So sourced and seasoned. So there's so many different ways of coming up with funds for closing, checking and savings being the normal, most common used, but also tax refunds to down payment assistance to gifts. The bottom line is this, that even though there are guidelines for everyone, not everyone is able to do these different items. So what you want to do is you want to talk to us, even if you don't think that you have the ability for down payment or to get all of the cash to close that you need. Talk to us and we'll be able to give you options on that because everybody's loan scenario is different. Okay, so that is the three pillars of being pre-approved. So if you want to walk through the steps of getting pre-approved, you speak with us. We look at your credit, we look at your income, we look at where your funds are coming from, and then we're going to show you options. Okay, so just like everybody's qualifications are different, everybody's options are going to be different as well. What we really pride ourselves in here at UMortgage is going to be taking an educated approach to showing you options. We want to educate you, the buyer, so that you know all of your options. We don't want to just show you one option and say, hey, this is the best, just trust me, right? No, we want to make sure that we are showing you all your options so that you know why it's the best. You're still going to pick that, but it's going to be the best one for you. So Andy, walk us through, you're sitting down with a client and you've already had them pre-approved and you're at that point of showing them, hey, this is what you're qualified for. This is your options. Walk us through that.
Yeah, so a big part of our consultation is making sure that you understand exactly what you're getting into when you start to look at houses or when you get to the point that you want to make an offer. Our goal is not just to gather your income, assets, documentation, credit, run your credit, pre-approve you, and give you a pre-approval letter that says, hey, great news, John, you're pre-approved for $300,000. Well, guess what? A $300,000 property on one side of Cincinnati versus a $300,000 on another side of property of Cincinnati can make a big difference with taxes and HOAs and things like that. So what we're going to do is we're going to not overwhelm you, but we're going to give you the options. So in this particular example, we have a client that is interested in putting in 10% down. We're showing them a rate of 5.99 and a rate of 6.499 and the costs that are associated with it. So we're going to go through in person or on Zoom, whatever works the best for you, and determine, okay, so this one, for example, we know the area that they're looking in, so we have a good idea of the taxes. So that's kind of a number that we'll go off of. So really the only difference here is going to be the rate and what it costs to get that rate. We're going to go through it with you, see what you're comfortable with, okay? Are you comfortable with bringing $35,000 to the table? Are you comfortable bringing $30,000 to the table? At this point in the game, you may say, okay, well, you know what, 10% down with everything that's in there, I was expecting closer to 30. Well, guess what? There's great options there. We can look at maybe putting less down, maybe 10% down, or going maybe with a higher rate. So what I'm getting at is that we're going to consult you and go through and work as a team together before we go to the next step, which we'll talk about here in a minute, which is putting the offer in, making sure you guys know what's going on. That's next right. Slide, do's and don'ts when buying. Some of these are very self-explanatory, but we still like to go through them. So do's, whether it's now or when you're in the loan process, keep everything in good order. Have it ready for us. One of the parts of our loan application, which is why we're so successful in winning offers and closing loans so fast, is when you apply with us, we're going to start gathering your documents right there. We're not going to just go off of verbal. We're not just going to take one pay stub. We're going to get everything ready for you for a consultation so that you, your agent, the seller's agent, and the seller know that you guys are 100% ready to go. Obviously, keep paying your rent, keep your credit shining, pay your bills on time. Come to us with any questions whatsoever. We're not your normal 9-to-5 bankers. Our teams are available for the most part 24/7. As long as someone sees a call or a text, an email, we're going to answer. Okay. Very, very, very important. I think we should probably have this as number one next week. Work with a trusted real estate advisor. Okay, a licensed realtor who probably told you to come on this call and is on this call. It's very important that you, us, and the agent all work together every single step of the way. Okay, here's some don'ts. Don't change jobs. If something happens, let us know immediately. Okay, our underwriters will find out. Don't make undocumented deposits. If you sell a refrigerator of an apartment or a house that you're moving out of, let us know ahead of time. We'll help you document that. Okay. Don't apply for new cards. Don't close accounts. Don't buy a new car. Big purchases, including furniture, things for the house, just come to us and we can talk through that. All right. Another biggest don't. Do not go to a house, a new build, go meet a builder or anything without your realtor. Okay. They are the professionals that are going to help you get this job done. Make sure you're not getting taken advantage of. And here's the best part. Your realtor doesn't cost you a thing, okay? It costs the seller a thing, so keep that in mind.
Yeah, so there's actually RESPA laws involved with, that's why you stress that so much, when you walk into a house without representation, it changes whether or not your real estate agent can represent you or not. So keep that in mind and listen to the experts, right? Okay, so we have let's walk through the process of purchasing a house again. Again, first step, you speak with us. We get your documentation. We go through a consultation. You are now fully educated. You understand what your options are, what your buying power is, and you are ready, and what to do and what not to do, right? Now you're ready to talk with your agent and start shopping for a house. This process can take 3 days or 3 months or 3 years in some cases, okay? But you're in that process of looking, okay? Now, the next step, the third step, making an offer. There's a proper way of doing this as well, okay? And again, going back to in this market, right? In this market, we do it a little bit different than we would have in the past, and probably what we'll do in the future. And the key to making an offer in this market is to make your offer stand out, okay? And the goal for us is not to have you be the most the highest price when you're making an offer, okay? Your price needs to be in line, obviously, but we want to make your offer stick out in many other different ways, okay? Now, keep in mind, none of this can be done if you haven't done the other steps first, okay? So if you're on the fence and you're out looking at properties and you haven't done your consultation with us and you haven't figured out all of the different options that you can do, you're going to be at a disadvantage when you go to make an offer. And as a positive, if you have done these things and you've done your consultation with us and you know all the options that you can do to make your offer stand out, and you're competing with folks that haven't done that with another lender, your offer is going to stand out, okay? So some of those things that we're going to do, and everybody on this call that has been pre-approved already knows this, but we're going to call the listing agent every single time you make an offer. Our offer is going to be customized to that house that you're making an offer on. So which means that the address of the house that you're making an offer on is going to be on your pre-approval letter. It's going to be on our cover letter, and the letter that you're offering is going to match the date of the offer. Okay, very, very important. Any contingencies are going to be on the pre-approval and on the cover letter. We're going to talk about if you can do a gap appraisal. If you've been pre-underwritten, we're going to be able to close in a super quick amount of time. We're talking 10, 12 days in some cases, depending on how much we've done. We can do delayed occupancy, also known as a leaseback. Fannie Mae allows for the seller to stay in the property for up to 60 days after you close. So that may not sound ideal for you as a buyer, but if it's the difference between you being able to get the house and not, if you're competing, I think it'd be a great option to be able to offer to a seller. And guess what, guys? Not every seller wants that. So if you offer it, and the seller doesn't want it, then you don't have to do it, right? So it's a great option to be able to offer these things. So there's this list and many others that we discuss with our buyers through the pre-approval consultation, and this is why our offers are getting accepted at a higher amount than most lenders out there. Now, once you're in contract, the job's not done. You've done a majority of it. I'd say you're probably 90% there, right? Because we've already pre-underwritten you in most cases, you're going to be just signing some e-documents. We're going to be ordering all the third parties because now we know what house you're buying. That means appraisals, title work, insurance. You're going to be in contact with our processor. A processor now sends a customized video. You're going to be swept through the process and educated, or excuse me, communicated with the whole way through, all the way to closing. So I want to jump now to and congratulations, you just bought a house. Now I want to jump to some. We put together a list of some of the best questions, or I guess most common questions that we're hearing right now. So I'll let you go ahead and have the first one, Andy. How long to close one time in contract?
Great. Yeah. So typical contracts are going to be written for 30 days. The big banks, the Fifth Thirds, the Huntingtons, the PNC banks, the US banks, they're still taking 30, 45, upwards of 60 days. It's really always been like that. Okay. That's where we've always had a competitive advantage. Now with UMortgage and with us and your agent, we have the ability to close your loan in as little as 2 weeks. In fact, our average turn time is 12.5 days in the last 2 quarters. So that's 2 weeks from the time you sign your contract and you sign our initial loan documents to the time that you are clear to close and ready to schedule that closing. So 2 weeks seems like super fast, but all the work that you put in working with us and your agent prior to the point where you make that offer and get into contract, that's why we do everything up front, to make the last half, that 10% is going to be the fastest and quickest and smoothest that is out there. And that's really going to help you stand apart from the offers. The slide earlier in the presentation, I think average of 3.5 offers on a house right now across the United States. Cincinnati is a little different. Yeah, there's times where there's maybe only 3 offers, but there's also times where there's 25 offers. Go back into the COVID times and there were 60 to 70 offers on houses going in within 8 hours. Okay. So when we talk to that agent, when we're calling them, we let them know, hey, tell us the situation with your seller. Do they want to move out in 30 days, 20 days? Do they want to stay, like Chad said, for an extra 30 to 45 days? Great. Whatever the case is, we're going to have this loan clear to close in 2 weeks. Okay. Next is, do I need to sell my home first before buying my next? That's a great question. We hear that a lot. We have transplants right now from Tennessee who asked us the same question 3 weeks ago, and we were able to find a way to get them to be able to make an offer that's non-contingent on them selling their house. What was great about that? They didn't have to worry about, getting up and moving, selling their house, maybe moving to Cincinnati and renting short term or storing all their stuff and all their belongings, and then moving again when they close. So we'll find ways, if possible, to put you in the position to be able to buy before you sell. Chad mentioned bridge loans a few slides ago. We'll look at opportunities to maybe use equity in your house that you have now before you sell for your down payment. So there's all sorts of creative ways that we will look into, but the answer is not necessarily. You don't always have to sell your home first. Chad, I'll let you jump into that.
Yeah, so why would you move now? The bottom line is this: you're purchasing something that's an actual asset, like we talked about. You're getting in on something that's going to increase in value over time. Okay, interest rates are short-term historically higher than what they have been, but guess what? When they come down, UMortgage offers refinances for our clients, and we do them at a discounted rate to make sure that we are allowing you to get, as the market goes down as far as interest rates, you're going to be able to capture that, and it's not going to cost you an arm and a leg to be able to do it. Okay. If you're interested in knowing more about that, please come to us and we'll explain that in more detail. And then the I don't want to buy until the end of the summer. When should I get pre-approved? This is like a no-brainer. Obviously, it's right now, right? Even if you're looking at purchasing this Christmas, right? The answer is right now. Okay. we want to look at you immediately and give you advice on anything with credit, anything with the seasoning of your assets, anything that we need to do that is going to help you when it is time to purchase. Purchasing a house is not something that you want to do completely unprepared. You want to be as prepared as possible for that time. So it's never too soon to start your process of getting pre-approved and getting your consultation. Okay. All right. So there's some of those questions that we've answered over the time. All right. So here's some reviews and some of our client testimonies that we've had over the past. You know, the reason that you're on this call right now is because someone thought highly enough of you to refer you to speak with us and anyone here at UMortgage, and that is because we are, you know, you're our client and we take it extremely serious. And here's the proof to kind of back that. Okay, so the 95 that you see there at the bottom, that is the score that we receive on our clients post-closing. We do a survey on every client, and this is the score that we're getting, and compared to our competition. The reason that that's the case is that we want you as our client, and not just you. We know that if we do a good job with you, you're going to refer us to more of your friends and family. So part of this process of this call, $300 off at closing. To receive that, please fill out the survey. Part of the survey is going to ask you, do you know anybody that is renting right now or that is possibly going to be in the market in the next 2 years? Please put their name and information down under the referral portion of the survey, and we will contact them and take great care of them. We really appreciate that, and we will make sure that we're showing them value, just like we hopefully have showed you today on this. So Andy, I want to thank you for being on the call. You did amazing. Always great to be on here with you. You have so much insight with your clients, and just want to thank everybody that's been on the call. Hopefully you got value out of that. Please click on in the chat or use the QR code there on your screen. Beyond that, hope everybody has a great holiday weekend, and thank you again for attending. We'll see you next week.
Thank you.